What is going on YouTube? It's your boy Dollar Mike back at again with another video for you guys. You guys can already tell by the title of the video, this is another dividend video, another risky dividend video for you guys. I have 3 risky dividends to talk about in this particular video. You don't have to choose any of these dividend stocks, or you can choose all of them. I personally only recommend that you choose one of the 3 just to minimize your risk in your portfolio. But if you're a huge risk taker, go for it by all means. Either way, we're going to get right into the video. I'm not going to waste any more time. Let's jump right into it. Let's go. Now, if you guys didn't know what I do here on the channel, all things personal finance are covered right here on the channel. So that means investing, saving, budgeting, credit cards, anything that's relating to money, I got you covered right here. So if you're interested in any of that, make sure you like the video, make sure you hit that subscribe button. Now let's start with the first stock. The first stock on the list is ticker symbol NLY. Ticker symbol NLY stands for Annaly Capital Management Incorporated. Overall, right now, the stock price is sitting at $8.41 a share. The current dividend yield for NLY is 10.23%. They pay out a quarterly dividend, meaning they're going to pay you out 4 times throughout the entire year, so once each quarter, and they pay about 22 cents per share every time that you go ahead and get paid out that dividend. If you invested $1,000 into ticker symbol NLY today, that's worth roughly $25 each quarter in a dividend payout. If you 10 times that or 10x that, that's about $250 every single quarter in passive income. All of the risky dividend stocks that's mentioned in today's video are mortgage-backed REITs, and we'll go over exactly what that is right here. I also mentioned it in my previous risky dividend stock video. Mortgage-backed REITs simply originate or purchase a mortgage on a leverage basis to earn money on whatever interest they receive from those particular mortgages. So essentially, they buy property, they lease it back out, and whatever money they make back in interest from leasing that property out is what they will receive in profit, and portion of that would be a dividend for whoever is invested in NLY or the other 2 I've mentioned in today's video. Now, most mortgage-backed REITs that I mentioned previously on the channel and I'm going to mention today only cover residential real estate. So that means they only go out and buy properties like homes and stuff like that, lease it out or rent it out or do whatever, get that interest, and then they get the profit from whatever interest. But in this particular case with NLY or Annaly Capital, they actually have residential real estate, they have commercial real estate, and they also do middle market lending, which is essentially financing for businesses. All in all, ticker symbol NLY or Annaly Capital has over $100 billion in assets across all of those different asset classes. So if you want to be invested in something like that, or you want to do some more research on it, there you go, that's the information for you. The second risky dividend stock is ticker symbol TWO or Two Harbors Investment Corporation. Two Harbors Investment Corporation has a current share price of $6.32. They have a current dividend yield of 10.61%. It's a quarterly dividend, and that dividend payout is about 17 cents per share every time they go ahead and make that payout. Just like NLY, with TWO, if you have $1,000 invested, that's about $25 in passive income every single quarter. If you 10x that or $10,000 invested, a little bit over $250 in passive income every single quarter. So as I mentioned before, this is another mortgage-backed REIT. If you actually go and look at a little bit of the history of the stock, you can see it was a nice plummet on the stock not too long ago, and that's actually because they did a public offering on their stock. They did a public offering of 40 million shares, which is honestly not a great thing for the original investors of the stock, but for new ones that might be just getting in like you and me, this might be a solid payoff in the long term, even for a risky dividend stock. So typically speaking, when a company puts up that many shares for a public offering, it's generally received negatively by almost all the investors that are already holding that particular stock. Like I mentioned before, for new investors, it's pretty solid. The offering essentially allows those original shares to be diluted, meaning they're worth less to the original investor, but to a new investor, it might be worth a little bit more or about the same. You can think of a public offering like a rare car. Let's say, for example, the new Acura TLX Type S. No, Acura does not sponsor me, but that'd be great. Either way, let's say the new Acura TLX Type S. Let's say Acura only makes 10,000 of these cars worldwide, and they said they're not going to make any more. So overall, once that car comes out to the public, people go and buy up all 10,000 of those cars. The car's worth a decent amount of money considering other cars that are being made every single day. They have no limit on how much they want to make. But for this special Type S edition, there's only 10,000 being made. Now let's just say 3-4 years down the line, or even a couple months down the line, everybody's already owning all their Type S's. They're loving it. It's worth a lot of money. Let's say down the line, Acura comes out and says, okay, well, we see the success of the Type S, or we're not really seeing the success of the Type S. Either way, we're going to go ahead and make 5,000 more of these limited edition Type S's. So basically, all the original investors or all the original buyers of that original car, they have 5,000 more cars out in the public now, basically meaning their original investment or their original buying of the car is worth a little bit less now. So if more people are allowed to get it, it's usually worth a little bit less, and that's the same thing when it comes to a public offering. Since there's 40 million more shares available, overall those original shares are worth a little bit less. And that's why original investors are usually pretty negative, or usually respond pretty negatively in the stock to something like this happening. And that's the reason why it's sold off so drastically like that. Either way, for new investors, this might be a good opportunity, so definitely do your research and find out if you want to be invested with them. The third and final stock I want to mention today is ticker symbol CMO, or Camstead Mortgage Corporation. Camstead Mortgage is sitting with a share price of $6.08 currently, has a 9.62% dividend yield, pays out that quarterly dividend, and also pays out a 15 cents per share payout every single time they do pay out that dividend. $1,000 invested is a little bit over $24 in passive income each quarter, and if you multiply that times 10 to $10,000 invested, then you're going to be under $250 every single quarter, just under that. As the final mortgage-backed REIT that I'm mentioning today, there's not too much really going on with this stock. Overall, they have stabilized their dividend to that 15% payout, or 15 cents payout, which is pretty solid. So hopefully they can keep that consistent and then go forward and increase it over time instead of the crazy stuff that they've had in their history. But overall, it's been pretty consistent for the past, I say, 8 or 9 quarters. So can't knock it there, especially for a risky dividend stock. And on top of that, they're actually one of the oldest mortgage-backed REITs publicly traded on the stock market, which, if you care, you know, that's pretty interesting fact. There's not too much going on with them. So overall, this is probably the safest play out of all of them right now. But if you want to get into it, if you want to do more research, there you go. Ticker symbol CMO, or Camstead Mortgage. So there you go. That's 3 more risky dividend stocks that I'm bringing to your attention. I might be investing in one of them, but overall, I like my previous risky dividend stocks video a little bit more. I think they're a lot more risky, but also a lot more lucrative when it comes to rewards. So I like those a little bit more. But these stocks, still solid stocks and still solid options if you're looking for more risky dividend stocks that I didn't mention in my previous video. So make sure you check that one out. Past that, make sure you check out those links down below. Those links down below will get yourself some free stocks, some free cryptocurrency. I know that market, well, both markets aren't doing too hot right now. And also free other stuff like money back and gas. If you want to be a part of the free personal finance Discord community, my link is down below for that. Also, my link for Patreon is down below for that as well if you want to check that out and support the channel even further. And past that, I'm working on a lot of different videos right now. I don't want to tell you guys which ones it is in particular, but if you have any video requests regarding anything personal finance, make sure you drop them down below in the comments. I just don't want to tell you only because, like, I don't want to make any crazy promises and then not deliver, so I'm just going to hold it back. You guys will be locked in for it. Either way, hit that subscribe button and you'll be all good to go. But plenty of stuff is coming for the channel. Tons of stuff that off the channel, even on the channel, you'll like all the content. I'm pretty sure you'll like it. But either way, drop a like if you did like this video. There's more content coming soon as always. You guys always know this. Portfolio updates is coming up. The dividend videos are coming up as normal. Those are pretty scheduled, kind of casual videos, but also some other stuff. So be locked in. I'm letting you guys know. I'm out. Take care of yourself. Stay safe. Dollar Mike. Peace.